Why I think a market crash is around the corner. In this video, I'll explain why I expect a market crash between now and January 2025, likely triggered by a manufactured event, aka the catalyst, before central banks step in with fresh liquidity and start pumping crypto even higher. History tells us that market crashes lead to both chaos and opportunity, and every crash has resulted in a massive wealth transfer. So, if this does happen, it will present a great opportunity for people to buy very cheaply before asset prices continue to rise. So, let's dive in. Okay, I just want to say that you may or may not know, but the Black Swan Capitalists YouTube channel has been banned for several days because Verson, my brother, was actually discussing some sensitive material. So, this just shows you that centralization around these social media platforms is a serious threat to us and to our voice. And so, what they did is they banned the channel for several days. So, just so you guys are aware, it will be back up and running very shortly. So, you guys know that's the case right now. So, this is what happens when you start talking about important information, truth, and potential information that can really open people's eyes. Ladies and gentlemen, Wall Street gets paid a lot of money to convince you that they know what comes next and that they have a crystal ball that tells the future. So, the sooner you realize this fact, the sooner you'll have an edge when it comes to investing in the markets. And every major market move is no coincidence. Crashes are planned, markets are manipulated, and we rarely see a bull run without a drop in asset prices first. Now, with elections around the corner and the Fed making aggressive rate cuts while pulling liquidity from the system, the perfect storm is forming, in my opinion, for a big crash or correction before the markets really continue rising and you see that altcoin season and bull run that we've all been anticipating. Now, I know we are in the early stages of a bull market. However, though, it's just getting started. And I just want to make this video so people can have an idea of what I'm looking at, how I'm assessing the market, the risks, what's taking place behind the scenes, and the data I'm looking at, so that you can have a different perspective and kind of see through my lens. So why do I expect a market crash in the risk on markets before we go even higher, followed by central banks pumping liquidity and asset prices soaring? Well, I've yet to see any data supporting a crypto bull run without a crash beforehand, and I'll explain. But before we begin, you need to understand that crypto and the crypto market has the strongest correlation to global liquidity and the global M2 money supply than any other asset out there, even more than stocks, more than real estate, and gold. And you need to understand that each crisis is 100% orchestrated, measured, and controlled, and always occurs right after a massive injection of liquidity into the system, into the markets. It's all about central bank liquidity, and that's the only thing that drives the crypto market as of now, since crypto has the strongest correlation to global liquidity. So the first thing on my radar, currently, the data shows that the end of quantitative tightening is just around the corner. The global liquidity index and the global M2 money supply, which consolidate the balance sheets of major central banks worldwide, is actually showing that they're getting ready to inject liquidity into the system. Now, they typically inject liquidity immediately after a crisis. There's historical data to prove this. If you actually look at the real data, follow the money, and look at the charts. So this is a big signal to me that really stands out. What does this mean? This means a potential crisis or some catastrophic event within the markets is probably around the corner, which will give the central banks and governments an excuse to inject and print more money into the system, also known as quantitative easing, stimulus, increasing spending, which sets the stage for a mega bull run within the assets that we're talking about, specifically risk on assets. So cryptocurrencies, stock market, equities. The second thing on my radar is that the Federal Reserve often reduces liquidity in the banking system, which typically triggers the financial crisis. Now, a clear example is from February 17th, 2020, right before the global event that took place. The Fed pulled $100 billion in repo liquidity from the system. Now, this action actually set the stage for the March 2020 market crash that we saw in the stock market and the crypto market. Despite the global event that followed, and you guys know what I'm talking about. In other words, the 2020 crash was already happening because of the Fed's moves and their actions. So this thing is interesting and actually worth questioning. It's all about the timing. Now, something similar is happening again. The Fed is currently removing $100 billion from the Bank Term Funding Program, which is the BTFP. That's the acronym. It's basically a program designed to stabilize banks after the 2023 regional banking crisis that we saw last year. In just 2 weeks, the program has already been reduced by approximately $29 billion. That's 29%, with plans to fully eliminate it by November 6th. Look at the timing, November 6th, 2024. That's the day right after the election. This is a major signal worth paying attention to because the timing is so interesting that there's no way it can mathematically be a coincidence. The third thing on my radar is the Fed rate cuts and the election collision, those two intersecting at the same time. The fact that the Federal Reserve is completely changing the direction that it's moving in with lowering interest rates aggressively during an election cycle really stands out to me. Clearly, you guys, every 4 years we have a presidential election and we can expect market volatility. So that's typical, it's expected, happens every 4 years. Nothing strange about that. However, what's really rare is historically, it's extremely significant when a presidential election coincides with the Federal Reserve's aggressive shift from raising rates to switching and cutting rates all of the sudden, especially by an aggressive rate cut by 50 basis points, which just happened recently. This means that something's wrong and that they're starting to make changes quickly before elections. The combination is highly unusual, in my opinion, and has often led to significant market crashes or corrections before asset prices rebound. Historically, this has been the case. And I use history as a roadmap to give me a sense of what's coming and what to expect, not to time the market, because I don't time the market. I just like to have an idea of what we could expect in the market. And I use the quantitative data, I follow the money, and I look at where we are in the cycle to get a good sense of where we're going and what's coming next. The important thing is the combination here. The combination of a presidential election and a drastic shift in the Fed's rate policy change. Now, elections occur every 4 years, but the Fed doesn't change direction and switch momentum that quickly every 4 years. So the timing is what I'm paying attention to. And why they're doing it, there could be a few reasons, but it's the timing that really stood out to me. Now, when both events happen simultaneously, as in February 2001, the markets tend to fall. This is what happened in the past. The same scenario unfolded in August 2007, and the same scenario unfolded in July 2019. An election paired with a Fed rate direction shift all of the sudden, and the market dropped significantly. So why is the Fed cutting interest rates so aggressively now? They could have opted for a more moderate approach, but instead they've chosen a much sharper path to just shift aggressively by 50 basis points right around the election time. Now, with another FOMC meeting scheduled just 2 days after the coming election, but at the end of the day, I know where this is going, so I'm not too concerned about it. They're going to create a mega bull run in various asset classes, particularly risk on, crypto, stocks, by printing more money while devaluing the currency's buying power. That's ultimately the outcome. That's what's going to happen. Doesn't matter who gets in office. Maybe in the short term that does, but long term it doesn't. Every person in office continues to print money and spend. Spend. That's just another word for stimulus, increasing liquidity, printing money, blah, blah, blah. The list goes on. They have all kinds of vocabulary terms that they use to confuse people. So understand that. Now, if you examine the historical data, every time the Fed changes direction on interest rates, we typically see a market correction. And it's not just about cutting interest rates. I'm not looking at the interest rate cut. I'm looking for a long-term period of increased interest rates, followed by a momentum shift all of the sudden in rate policies while we have a presidential election, all at the same time, simultaneously. That's what I'm looking for, and that's what stood out to me. Just like we saw in 2001 and 2019 recently, well, a few years ago. And for instance, I like to look at the Russell 2000 index because it's the closest to the crypto market. And if you look at the Russell 2000, you see that the last major drop of 43% happened right before the 2020 global event hit the news. Now look at the timing again. And now we're seeing another rate cut aggressively right around election time, which means if you were following the money and looking at the quantitative data back in 2019 and were really paying attention to the markets, you could have known that there was about to be a mainstream crisis in 2020 before it was actually made public, because that's what the data was showing. Something big, some catalyst was on the horizon. And it happened right after the repo markets had issues. And we saw this in 2019 to 2020. Now, I'm not ignoring the fact that the Fed initiated and has this tool called quantitative easing in 2008. I know what you're thinking. Anything before 2008 is irrelevant because in 2008, they have quantitative easing now. They can just print money, keep the markets pumping. I understand that. I get that. It's a key tool for economic stimulus when things start to go south. Now, the thing is, regardless if they have QE and the ability to print money and artificially inflate the markets, the fact is they had that in 2019, okay? So my point is, even though they have that, they don't step in and turn that on and use that to its fullest extent until something starts breaking in the markets. And that's what this whole video is about. That, of course, they will stimulate and step in and save the day, devalue your currency, pump asset prices to the moon, making the rich even richer. People that own assets get richer. If you don't own assets, you're going to get poorer. That's going to happen. So I understand that. But they let something break before they step in and turn on their magic money printer. So any data before 2008 comes with an asterisk, and I get it. But right now, we also need to consider the factors that we just mentioned. So geopolitical tensions, an overvalued stock market, the Fed pulling 100 billion of BTFP liquidity from the banks, and the upcoming presidential election, all while at the same time the Fed shifting momentum in the complete opposite direction, aggressively lowering interest rates. So to me, all of this together is setting the stage for a mega bull run, but not without a crash, in my opinion, or some sort of big pullback so that the billionaires, insiders can step in, buy cheap before their buddies at the Fed pump the markets higher. The fourth thing on my radar, this is the last thing on my list, is that the job openings are falling at an alarming pace. I'm looking at the data, and an indicator that has historically preceded major economic downturns historically. And history doesn't lie. So this is what the data says. And we've only seen declines of this magnitude 3 times since the year 2000. It was the dot-com bubble. That was the first one. Second was the 2007, 2008 financial crisis. And the last one was the 2020 global event that took place. And each of these resulted in a sharp economic downturn, crash, correction, call it what you want. People lost a lot of money, asset prices dropped. We'll just say it for what it is. Now, this is exactly what happened in the past, and we're seeing it play out again right before a supposed crash could happen. The crazy part is that the job decline in job openings is happening at the time when consumers have already depleted their excess savings from previous stimulus programs and low interest rates. So with household debt at record levels and inflation still straining disposable income for most people, and consumer spending, which is literally the lifeblood of the economy, is weakening. We have everything pretty much setting up a financial tsunami around the corner. So we're facing a similar setup right now. Election uncertainty, geopolitical tensions, an aggressive rate cut from the Fed with presidential election. Now, historically, this combination has led to market downturns every single time. Based on my analysis and looking at the data, the message is clear, and this is what it means to me. This is not financial advice, but I'm looking at the data. No emotions, and speculation does not drive my reliable results that I've had over many years in crypto and in the general markets. Now, the way to be most consistent and to have a good sense of what's happening in the moment and to get a good sense of what follows next is by following the money. I always reiterate this, and I will again: follow the money, look at the quantitative data, and know that where we are in the cycle will give you a better sense of where we're going and where the cycle will take us. So those three components are a major part of my investment philosophy, and this is how I've made informed decisions and managed to succeed in investing in the markets in various asset classes. And I'm not trying to toot my own horn, but this is the fundamental foundation of my investment philosophy, along with a few others. But again, central banks and rate movements have a far greater impact on the markets than elections alone. At the end of the day, the central banks and the interest rates, the Fed rates, this is what really is responsible for a lot of the market shifts that we see. And remember, market cycles are extremely important because market cycles are almost like a reflection of people's behavior in the markets, because markets are driven by people and people are driven by emotions. So just something to think about. But big investors never buy at market highs. They wait for market corrections to get in at lower prices. And with several asset classes at the moment near record highs, like the stock market, real estate market, not crypto, the big money is pretty much, in my opinion, sitting on the sidelines, ready to enter once rates drop and the markets correct significantly. That's how I feel about it. And this will really set the stage for the next or the coming altcoin season and mega bull run cycle that we're about to experience in 2025. And I believe the Federal Reserve will increase their balance sheet in 2025, which will drive more liquidity into these markets and increase optimism from retail. Now, opportunities are born in chaos. Those who prepare today will lead tomorrow. And that's how I look at the world. Whether the crash happens or not, the key is staying ahead while others hesitate. So do your research, trust the data, and be ready to move when the tide shifts. At the end of the day, the real winners aren't the ones who predict the storm in the market. They're the ones who are ready when it breaks to step in. Thanks for watching. I hope you guys liked the video. Just prepare ahead of time. Don't take this as financial advice because it's not. Just wanted to share my perspective. If you want to speak with me and my brother one-on-one, we offer one-on-one coaching and consulting. touch base with us, send us a message from the website. We'll be happy to speak with you about anything regarding these markets, investing, crypto custody, strategies to exit strategically, and the list goes on. Until next time, I'll catch you guys later.